Thank you so much for staying tuned in. Well, let's get you some more news and updates then. And market watchdog SEBI unveils new six-step framework to regulate high-risk derivative trading. Now, move includes increasing the contract size to 15 lakhs from 510 lakhs earlier and limiting weekly expiries to one per exchange. Now, the new rules also effective from the 20th of next month. Let's also go across to my colleague Ankur Mishra, who's standing by with more details then.
As we reported here on ET Now, SEBI has come out with final circular on F&O trading. Now, all 5 recommendations which were made by the committee, which also featured in the consultation paper, has found place in the final circular as well. These 5 of the things which SEBI has announced includes upfront collection of margins, removal of calendar benefit, intraday monitoring of position limits, and more importantly, the contract size of index derivatives. Now, earlier, the contract size was limited to 5 to 10 lakhs, which is now been increased to 15 to 20 lakhs, and a glide path has been given from November 20 that will start. In fact, in all the announcements, there is a glide path which is given for the implementation starting from November 20 to February 2025. Apart from that, there is also an announcement of rationalization of weekly expiries. As far as the volumes are concerned, there were huge volumes in these contracts, and SEBI has come hard on all these contracts. Now, one contract, one exchange needs to be decided, and this will happen with the consultation of both the exchanges together. And finally, only one expiry contract will remain per exchange. There is also increase in tail risk coverage on the day of options expiry, and that will be implemented from 20th November 2024. All in all, after coming out with a study at 93% of investors were making losses in F&O, now SEBI has come out with norms to curb them, and sources have informed us that this is just the beginning.
All right, Ankur, thanks so much for all the detailed insight on this. This one is for sure weighing on the Indian markets. We also spoke to Sudeep Bandyopadhyay and Sumit Agrawal to understand the significance and the impossible impact. Let's listen.
There will be definitely an impact on the market as far as the volumes are concerned. You will see the market volume, particularly in the F&O side, shrink significantly, at least in the initial phase. It may eventually pick up when things stabilize a bit, but initially there will be significant shrinkage in the volume of F&O contracts, F&O trading in India. As far as the brokerages are concerned, they will get impacted. Their income will get impacted. But I think, as is being told, I think these are for the good and structural benefit of the market in the long run. So, I'm not too worried about the market, as far as long run is concerned, or the impact of these measures on the overall market in the long run, or even medium term. But short term, there will be definitely a negative impact. There will be, sentimental negativity, and it was expected, though this entire measure which is being taken by SEBI was on expected lines, there will be definitely a negative or a dent in the sentiment at the beginning.
I think the exchange as well as the stock brokers for a shorter term are going to have some impact, especially if you were to see the concentration of liquidity that is going to be now surrounded on a single benchmark index. Earlier, all the traders which used to spread their activities across various contracts, they'll have to now focus their trading strategies on one index. Now, this has, and in the past also, has brought out new challenges and new issues. So I think in that sense, exchanges as well as their members will have to reset their institution, and there will be new challenges as well.
All right, then that's a take coming in from the experts as well. The contract size has been increased to 15 lakhs from 5 to 10 lakhs. But how will this really six-step framework impact F&O trade and key players in the capital market space? Then Sharad is joining in with an explainer.
Well, yes, as per Jeffries, the SEBI's measures has been taken to do a calibrated tightening in the F&O market, and the impact analysis states that roughly 35% of the total industry premium, which is on a weekly contract basis, are likely to get impacted. Now the key deviations versus the earlier proposals which had come in the consultation paper, the two important things come out. A lower hike to expiry day of margins is of 2%, and earlier it was of 8%, and also the lot size hike, that is almost of 2 to 3 times. Earlier it was expected to be 3 to 4 times. Now the most impacted players are expected to be discount brokers, followed by the exchanges. But now let's look at how the implementation is actually going to pan out going ahead, and there are certain timelines which need to be understood. On November 20th, 2024, three important things will happen. Extreme loss margin will be hiked by 2% for short option contracts, and the minimum contract size for index derivatives is also expected to increase. There will also be rationalization of weekly index derivative products to product per exchange. On 1st February 2025, two important things will happen. The first one being removal of calendar spread treatment on expiry day, and also the upfront collection of option premium from buyers by trading or clearing members. Lastly, on 1st April 2025, intraday monitoring of position limits would be there. To simplify, discount brokers like Angel One Zerodha, there's a high potential impact coming in, and also Angel One in the listed space. Traditional brokers will have low potential, such as MOFSL, ICICI Securities. Exchanges, BSE, NSE, they will be highly impacted. While if you look at wealth managers, AMCs, depositories, RTAs and clearing members, there's expected to be little or no impact at all.
Sharad, thanks very much for bringing more
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.